Hi there, it's time to use the Wyckoff lens to look into Polygon as to where it is and which stage it is heading to. So let's take a look at these three items during the session. And to start off with, this is the weekly chart of Polygon. Previously, I shared these two yellow dashed lines across these key levels. Okay, last week, Polygon dropped below the red key level of 15 cents. Currently this week, to start with, there is a bit of price climb, but as long as the downtrend continues, the 0.095 support is where it is going to test. When we get to the daily chart, we'll see more detail. This line, you won't see anything to the left because Polygon was originally called Matic, and those lines are borrowed from the Matic chart. You can still find in TradingView. So the big picture remains same. The test and spring is confirmed basically, so that 75% is confirmed. So we don't need these percentages anymore. We're hoping to see another sign of strength, meaning the price come back to challenge the yellow key level of 0.28. It's still a long way from where it is. As long as the volume, the white ones especially, doesn't pick up, the chance of getting up here is pretty low. Then what it happens after the spring then? Of course, there can be subsequent tests, meaning trading sideways between, either this yellow dash line that I just talked about and the orange key level of 0.20, or between the red and the orange. Okay, looking at the volume over the past couple of weeks, especially the last 2 weeks, those were higher volumes without a lot of buying from the bottom. Compared to the beginning of this month, this long wick at the bottom means there were quite a number of people buying from that point. The story changed over the past 2 weeks. So this week, let's see what's going to happen in the next 6 days and 5 hours. Now, we're at the daily chart. We know this downtrend has been going on. And after looking through a couple of other charts, I tend to think that these tags has to be adjusted. Alright, so this may not even be the spring. So we are actually, one stage is missing over here. That's the preliminary support without a Y, okay? During this horizontal period along or between this yellow dash line of 17 cents and the orange key level of 20 cents, the actual selling climax in the daily may have not appeared yet. Alright, so let's fix this while we are expecting some more tests to come. And obviously the other ones haven't shown up yet. So this should come after the selling climax, assuming if this really is what it is now. Last time we talked about there's a chance for Polygon to break outside of the downtrend since it's trading on the stronger side of the channel box or the air hockey table. That points to the end of this month. This chance hasn't vanished yet. If, like I said, the volume supports and it climbs back to within that triangle, it can still break outside by the end of the month. But if it doesn't, if it gets to that point, the ceiling of this the downward trend or the air hockey table, and bounces off from that point, much like what it did during the 10th and 11th. Actually, there were multiple tests, in early this month. If it happens similarly, that means it's confirming that the downtrend is going to continue, and the next breakout timing, more solid one. Of course, there can be good news that makes it breaks earlier. The next one will come somewhere around Christmas. Alright, by then we'll be able to see whether Polygon is still trading within this zone and eventually get to deeper tests before there is sufficient rebound and eventually breaks outside of the channel forming or going towards a new distribution cycle, at least in the daily chart. Okay, weekly is still far to another distribution cycle. Okay, at this point, we're just hoping to see a sign of strength. Okay, that means challenging the 28 cents, almost 2 times the price of now. All right, so time points, Wyckoff stages, key levels. That's all for Polygon.